ICMS, the value-added tax, is a major challenge in Brazil, with shell companies exploiting the system by issuing fake invoices, leading to substantial revenue loss. Brazil has been losing yearly billions of dollars due to ICMS fraud, besides the unfair competition it creates in the private sector. This fraud occurs in two broad variations: fake tax credits and carousel fraud. The first type involves creating fake tax credits, such as the example below. Company A, a plastic seller, pretends to buy raw materials from Company C, a shell company in another state, without exchanging any real goods. Company C issues invoices, generating fake tax credits for Company A. Then Company A uses these credits to reduce its value-added tax liability when selling to legitimate customers, profiting from the fraud. Type 2, also known as carousel fraud, operates as follows. Company A, a meat processor, intends to sell frozen meat to Company B in another state. Then Company A establishes shell companies C and D within its state, exploiting lower or non-existent in-state tax rates. Finally, Company A sells meat to C, which then sells to D, creating a double layer of fraud. These transactions exist only on paper. Company D sells the meat to a legitimate customer in another state without paying the due taxes. In both tax fraud scenarios, pursuing shell companies C and D proves challenging for authorities. These firms lack assets or operations, and the lengthy investigation and court proceedings allows the statute of limitations to expire. Consequently, the true beneficiary of the fraud, Company A, remains unscathed. Introducing SATRIS, the System for Advanced Tax Risk Investigation and Scanning, a World Bank-supported initiative for preventing tax fraud. Powered by an extensive data lake comprising 50 million company details, 60 million social program beneficiaries, all partners of firms, legal proceedings, and more than 3 billion data points. SATRIS utilizes advanced analytics to combat tax fraud in Brazil through three key components. First, SATRIS detects automatically a comprehensive set of red flags for identifying shell companies. Second, SATRIS technology uses a shell company detection model trained on 7,000 known shell companies that have already been uncovered in numerous criminal cases in Brazil. Last, the system uses advanced network analysis that reveals hidden connections between new companies and previous tax fraud offenders for real-time detection. The system offers continuous, seamless monitoring for Brazil's 50 million firms, demonstrating an unmatched big data effort in combating fraud. Discover SATRIS and join the fight against tax fraud.